Hey everyone, today I'm going to talk about Shopify. The company recently reported earnings, and I'm going to take a close look at how it did, how the stock is doing, and more importantly, whether it's a good buy right now. So let's jump in. Shopify is a leading e-commerce company with a massive global presence around the world. It's been doing well in recent months, and on Tuesday, the Canadian-based company released its latest earnings numbers. It closed 2024 strongly, reporting 31% revenue growth for the final quarter of the year, exceeding Wall Street expectations. The company generated $2.8 billion in sales, beating analyst estimates of $2.7 billion. However, earnings came in lower than projected, with adjusted EPS coming in at 0.39, below expectations of 0.43. Gross merchandise volume, or GMV, is a key metric representing total transactions on Shopify's platform. It hit $94.5 billion for the period, which surpassed forecasts of $93 billion. And this marks Shopify's strongest GMV growth in 3 years, reflecting increased merchant activity. It's a great sign of the company's diversification, as despite challenging economic conditions, buyers are still frequenting Shopify's platform. Looking ahead, however, Shopify is forecasting mid-20% revenue growth in Q1 of 2025, which is notably lower than analyst estimates of more than 24% growth, and it's a steep drop from the 31% growth it achieved this past quarter. Factors such as foreign exchange and the absence of a leap year may weigh on the company's growth in the near term. And there is, of course, the impact that tariffs may have on the company's merchants and what it may mean for GMV. That isn't factored in the guidance, but the company appears to be a bit conservative, as tariffs may be the biggest wild card for Shopify moving forward. Shopify's merchants may feel the brunt of that, and if that happens, transaction levels could fall, and that will trickle down and impact the company's results. A lot depends on what tariffs the US president decides to impose and how significant they may be. Unfortunately, that's difficult to predict and presents a significant near-term risk for the stock. The company needs revenue to be strong because it's expecting operating expenses to rise, as a percentage of revenue anyway. Shopify projects that OPEX will be around 41% to 42% of the top line in Q1 versus the 32% it came in at this past quarter. But of course, if revenue is softer than expected, then that percentage may climb even higher in Q1, and that won't be good for the bottom line. However, despite these uncertainties, Shopify remains well positioned for long-term growth. It's been expanding beyond just serving small businesses and is attracting larger clients such as Reebok, Mattel, Barnes & Noble, and many others. The big question, however, is whether the stock is a good buy right now. Shopify stock has surged 86% in the past 6 months, bringing it to its highest levels since 2021. It has been one of the hottest stocks on the TSX to own of late, but can the rally continue? The most recent quarter was a positive one for Shopify overall, and the stock was up around 3% on Tuesday. The company continues to deliver strong revenue growth, it's expanding its free cash flow, and increasing merchant adoption. While Q1 growth is expected to slow down, the company remains a leader in e-commerce technology with significant long-term potential. For growth investors, Shopify can be a good buy for the long haul, as it is improving profitability and has a history of exceeding revenue expectations. The danger, however, is that in the short term, there could be a lot of volatility ahead for the business, as potential headwinds due to tariffs and trade wars may weigh on its merchants, and thus impact the number of transactions on its platform. Throw into the mix the stock's elevated valuation, and it sets up a scenario where Shopify may be vulnerable to a sell-off, especially if future quarters prove to be underwhelming. However, with the stock continuing to pick up steam, a slowdown may not happen just yet. Shopify's 20-day moving average recently crossed above its 50-day moving average, which is a bullish signal which may lead to more of a rally in the weeks ahead. But if the company falters in one of its upcoming quarters, the stock could be due for a big drop. If you're considering buying shares of Shopify, you should be mindful of its high valuation and the risks that come with it right now. While Shopify is a good long-term buy, I'd wait for a dip in value before buying it.